everyone. Welcome. We'll give everyone a few more minutes just to stream in because this is the final demo day session of our cohort 7. So we have 8 strategies to demo. So quite a few. I want to make sure we have enough time to present everyone's strategy. Happy folks answer a few questions about them afterwards. So let me go into the agenda. Before we actually go into every strategy, I wanted to just explain a bit how the certification process and also this NFT kind of works to make sure that we're all on the same page. So I think starting with this cohort, we're going to get more serious about certifying the folks who have taken Botcamp in the past, as well as folks in this cohort. So we're going to prepare basically a few things. One is like a PDF certificate that you can email around or post on social media. And we'll also include we'll have a list of certified developers on our website. And we'll have basically your name, your Discord handle in case someone wants to contact your Discord, and also a link to your strategy design template. So we'll kind of put everything in your strategy design template. So if you wanted to let's say talk more about yourself in that template, you can also edit that in case that's probably the main link people will kind of use on the website. And then so I'll send out instructions in probably about a week with how to do this after we have the list on our website, and also how to add this certification badge to your LinkedIn profile with a link to the credential itself. So I've had some questions from people who, not everyone in the cohort was able to submit a strategy on time. And given the intense nature of Botcamp and the fact that, we all have, things outside of this we don't do, I totally understand that. So we want to give everyone about 3 months after the end of the cohort to kind of submit their strategy and get certified, if you will. So basically all you need to do really is to send us a link to your strategy design template with a working kind of strategy code and a video that we can review. Afterwards, we will kind of send you the email that we send everyone else with the certification info. Okay. So that's certification. And so the NFT is kind of separate. The NFT is kind of like a fun thing we started doing a couple cohorts ago. And basically the way that works is I think we'll create basically one edition for this cohort. So that's everyone who presented demo day can claim this cohort 7 NFT. So that basically the 9 people who have submitted strategies, including one team as well. And then we'll do a voting. We'll kind of do a voting throughout this presentation, and we'll all vote for. Basically, we'll rank the strategies we present. Anyone is eligible to vote on the call, including the Hummingbot Foundation staff. And then we'll create a 1 of 1 NFT, which will be the cohort 7, and most valuable strategy NFT. So I have a little example of it here. I created a test version just to make sure it works. But so basically for both of these NFTs, you can kind of pull it up on OpenSea and transfer it around and stuff. So I think we need to put some more work into the design, make sure that it's actually something that looks nice. But hopefully there's something like a memento of your experience with Botcamp. And if we keep on doing these, hopefully they'll accrue some value in the far off future. Okay, so so I think that's basically the if you have any questions, just put them here. So I think with that, we're going to get into the actual kind of strategies. So if you click on this link here or use a QR code, you'll see kind of like this ranking system we use called Menti. Basically, what you'll be able to do is rank the 8 strategies that you'll see. And then if you need to leave early, you can submit. But basically, we'll kind of collect this survey. At the end, this will be basically the data set we use to determine who wins the most valuable strategy. So let me just put this link in the chat again. 1 second. Let me put the link in the chat so we can put the link here as well. Okay. All right. So let's go ahead and get started. So we have 8 strategies to demo, and I think I've basically added them in order of when people submitted their strategies to us. So we have the Spot Perpetual Arbitrage strategy from Perpetual, and John from Common Capital has a Cross-Sectional Momentum strategy. Patrick has a Liquidity Sniper, which uses this new liquidity feed that he submitted, the Hummingbot. I think Vlad has a Directional Strat, and then Anubix and Melted Blocks, so David teamed up on kind of like a dynamic LP management strategy. Ding Seng, he created kind of like a V2 version of the Avellaneda Stoikov strategy. Ling XYZ created a scalping strategy using Hummingbot. And finally, last but not least, Dimitri created basically a Uniswap V3 kind of like an automated LLM and like LP execution. So to be honest, I was really impressed with the caliber of the submissions in this cohort. I think that, and I've seen this, actually, if you compare kind of the quality of what people created, the sophistication of what people created this time versus what people were creating the first cohorts of Botcamp. I think that, yeah, it's clearly that I think it's really testament to everyone's kind of like, effort that they're now creating fairly sophisticated strategies that I think are near professional grade. So let's get into the demos. And then I think we'll just kind of go through these each one by one. And we'll try to have like maybe room for like 1 or 2 questions afterwards. So if you have questions, put them in the chat. I'll probably do like maybe 1 or 2 questions, 1 or 2 minutes of Q&A. But we do have like quite a few demos to get through. So I want to make sure we have enough time. All right, so let's go with Propit Spot Perpetual Arbitrage V2.
Hi, my name is Peter, but you may know me as in this video. I'm going to look at spot perpetual arbitrage strategy that takes advantage of the price differences between spot and futures markets. Let's dive into the fundamentals and see how this works. Let's look at the notion, where is my strategy design, and to look at this chart. This chart describes an arbitrage strategy between spot and futures. It starts with buying on the spot or between on the spot market, and at the same time selling on the futures market when the price on both markets diverge sufficiently. So entry point condition met, so entry point can be set in the config file. So we are in the trade, and the futures price begins to decrease and spot price starts to increase. The strategy evaluates the moment to close positions to lock in profit. So P&L condition is met, and this profitability can be also set in the config file. The advantage is also that we can accumulate during the trade funding trades, because when the futures price is above spot price, longs are paying to shorts, so there is a positive funding rate. The second picture, it's a flow diagram where when we will start strategy, we look at the active arbitrage, if there is active arbitrage. So if not, because we are starting the position and waiting for the entry point. So if not, we are waiting for the profitability above the entry. If this condition is met, so we will create new arbitrage actions and executions. So we will start buy on the spot market and shorting on the perpetual. As I said, we are in the loop, so we already have active arbitrage, so we're monitoring it and waiting for the condition when the current P&L is above the profitability threshold. So we execute stop arbitrage actions and close the positions. Again, we are trying to find out if we crash or not. So let's look at the strategy, how it works. I wanted to save time, so I've already created the config files. So my controller is generic. So controller type is generic. So let's start the strategy. Create controllers, config, generic with controllers. As you can see on the right side, 2, 3, and entry point or entry condition is not met. So stat live, we can see for my status current profitability. Our entry limit is 001. Active arbitrage, so there's false. Current P&L and so on. So let's simulate the entry point is met. I will stop the bot and change the entry point to negative and start the bot again. Now you can see that buy side we bought 344 Dodge for $50 and short on the perpetual side as well. Let's look at status live, and as you can see, there are 2 position executors on the spot side and also on the sell side, and you can also see the whole setting. So thank you. That's all from my side.
Oh, well, that was a great strategy, actually. Yeah, I think that I think what he illustrated, what I really took away from that was that there might be like a standard stock, like a fundamental arbitrage strategy in the repo, but I think there's a lot of value in doing it yourself, because as you can see, there's like a lot of like nuances with the entry and the exit that you can control. And it's kind of like if you design your own custom status, then you can kind of really see what you want to see and kind of like really configure the strategy how you want to configure it. So yeah, thank you very much, Propit, for demoing that first one. Any questions for Propit? Propoid. I think Peter is actually on the line if you have any questions. But yeah, Peter, do you want to say something about your strategy? Anything you want to add before we move on?
So hi, can you see me or can you hear me?
Yep.
Okay, great. Just one comment. I'm not a developer, so it was a great opportunity to improve my skills, technical skills. So thank you for that, and I really enjoy this cohort. So I don't want to comment my code. So if you have any questions, just let me know and we can discuss it.
Okay. All right. Thank you, Pete. All right, so let me share my screen again, and we'll go into the next presentation, which is going to be cross-sectional momentum strategy by John. So this video is a bit long, so I want to play at 1.5 times x. It's too fast. I'll kind of slow it down, but I'll try to
close orders. Hey everybody, this is John Young from Cohort 7. I'm going to be covering off on the cross-sectional momentum strategy that I put together and is based off of research by Star Killer Capital. So the purpose of the video is I'm going to cover off on what the cross-sectional momentum strategy is, as well as the various pieces within Hummingbot that I created in order to get to the end state, or close to end state that we're at. And if you or anyone wants to read up on a little bit more detailed information, if we go to the submission, the design section, I'm the cross-sectional momentum piece right here. So this will have all the goal, hypothesis, description, and other items if you want to get a deeper view into it. What I'm going to do is cover off on the code here. And so the code is made up of three main pieces. The first one being a rebalance executor, the second piece being a EMA crossover controller, and then the third one being a actual cross-sectional momentum controller that will utilize the EMA crossover and executor, rebalance executor under the hood. So the first piece here, the rebalance executor, is pretty straightforward. What the executor will do is it will take in target weights that the user has specified. So this will be a combination of assets as well as the weight that we want them to go to, and then a quote asset. So let's use the example of USD as quote asset, and let's say the rebalance executor was sent asset of ETH at 0.2, which means we want 20% of our quote asset USD in ETH, Bitcoin at 0.2 as well, so it'd be 20% Bitcoin, and then, you know, let's say 60% in XRP. Then what the rebalance executor will do is take in the weights, take in the quote assets, and then it will work through and calculate rebalance actions that are needed in order to get the proper rebalancing within the portfolio. So this will handle especially in the control task here, this will handle the sell actions, the buy actions. It will wait for the sell actions to complete first before it goes forward with the buying actions, since it will use the sell quote amounts in order to complete the buy tasks, and then it will go through the entire life cycle of the full rebalance, as well as in handling failures, which since we are handling multiple different orders here, there is a higher tendency for failure. So there's a couple strategies we have in place in order to handle those failures. The next piece is the EMA crossover. So this one is pretty simple. It's similar to some of the other directional controllers that have been built, but the goal of this one is to take in a fast exponential moving average, a slow exponential moving average. These are the periods. So in this case I have a 5 and a 50, and then what it will do for the signal is it will attempt to add the EMA fast and slow to the data frame, and then the get signal will compare that there has been a cross, whether that cross has been up, and if the cross has been, for example, the 5 above the 50, then it will generate a buy condition. If it's a 5 below the 50, it will generate a sell condition. And this will be updating the process data in each of the ticks, so that subsequently, when we want to go to the final piece, which is our cross momentum with trend overlay, this will inherit from the EMA crossover controller and the controller config, and then we'll add in the different parameters of the rebalancing that we want to see, as well as the population of assets that we will go to rebalance into. So quote asset, what we want our rebalance quote to be calculated in, an additional quote weight if we don't want to use a full 100% of the quote asset. So let's say we put in 5, that means that we'll use 95% of the quote asset. In the case of USD, if we have $100, we will only use $95 of it. We have a minimum order amount to rebalance, so this can make sure that we're not sending in orders that are too small, or if we have very small amounts of certain assets, that we can ignore those within the rebalance. Screener assets, now this is provided by the user. Eventually in the future, we'll want to be able to calculate this on the fly, but as it stands right here, we have default screener assets. We have a screener interval, so all of the screener assets will go into candles data, and then we have an interval for all of them that we can compare against. So for here, we also have a look back period, and what this is doing is ranking the assets by their percent returns over the interval and look back period. So if we have all of our screener assets at a 1 hour interval, we'll look back at 5 hours worth of data and we'll rank the assets by their percent return. The goal here being that assets that have been trending higher have a tendency to continue to trend higher. So we want to get the top earning assets over that period so that we can include those into our screener universe. We can actually include those into our target assets. So I'm going to do a quick launch here. Now I have a test mode set on the EMA crossover. So what this will do is have it set to always rebalance, just so we can see on this video an actual rebalance live. So what that will do is it'll always send a 1 signal no matter what. And then the rebalancer will initiate the rebalance, and then we'll also activate a cooldown period so that we just don't keep rebalancing over and over again. So it will do 1 rebalance, and then it will sit for 100 seconds or so, just so we can see the rebalance. So I'll go ahead and launch it here, and let's see if we can get a nice little showcase going. This guy out of the way, cross. So the initial piece here will actually get the order books of all of the screener assets that were specified in. So as that's going, what I actually want to show is my Kraken account. So what we should see here is a flood of orders come through because it will do a rebalance. So we'll see if that is actually the case. Oh, that's right, we had a, let me take off this breakpoint here, and I'll do that, and then quickly go back here. So we should see, here we go, here's all the orders getting executed. And so what we actually saw happen, we go to our portfolio and go to our balances, this actually did a full rebalance at a 95% of cash. So you can see it chose 1, 2, 3, 4, 5 of these assets to put into. And then if we go to our ledger, and actually let me stop the strategy just in case here, I'll put this breakpoint back on. And then you can see in our history, in our close orders, we just did all of these guys right here. So it looks like we sold ADA, NEAR, AVAX, and ETH, and then bought XMR, Render, Doge, and USDC. So it completed a full 4 and 4. It looks like we may have had an existing one in there. And yeah, so that is the cross-sectional momentum demo, where its purpose is to rebalance the portfolio into top earning assets based on a user specified period. The Starkiller Capital example was based on a 5-day SMA crossing a 50-day, EMA, 5-day EMA crossing a 50-day EMA, and then utilizing a look-back period of 30 days for momentum cryptocurrencies. So in this one, I wanted to do very small intervals so I could show you how the rebalancing itself was actually working. And yeah, so if you have any questions, most of the information will be in the strategy design piece that I showed, and then I'm happy to answer any questions that anybody has. So thank you. Hey everybody, this is...
That was a great strategy, John. Yeah, I think that these kind of strategies, like these trend overlay kind of these strategies are very popular, I think, in all finance. So I'm really glad that you've taken the time to build one of these using Hummingbot and show it in action. I think kind of given the low fees that are in crypto, especially if you have some type of VIP tier, I think these strategies actually do make a lot of sense because you can kind of execute these kind of rebalances at a very low cost.
I have a question about this. Can I ask?
Go ahead.
So in traditional finance, like I'm guessing some hedge funds have this kind of a similar kind of play where they have different buckets of different assets, and based off the market environment, they allocate like 20% to bonds or 30% to equities, or I'm guessing, or something, however they do it, and they automate it. Is this kind of similar to that, where you're going to kind of read market conditions and then allocate your asset percentages accordingly?
Yeah, John, do you want to take that?
Sure. I'll you can give more general context. I can give it specifically to what we are doing. So in this case, this is a strategy. It's effectively up to our PM to decide when this is a valid strategy for us to use, because momentum ones are not valid at all times. For example, this strategy did incredibly well in 2021 and 2022, did awful in the first half of 2023, but did amazing in the second half of 2023. So it's kind of up to the PM to decide when to actually allocate capital to this strategy, and also how much capital. And that is, for us, that's kind of in flux quite a bit. We try to not do too much disruption, but obviously, capital preservation is number one. So
yeah, I think that's a great. The only thing I would add to that is I think these kind of rebalancing strategies, it really depends on how you want to use them. So you can think of them as like something that's like what you're describing is more like almost like an index approach, where you rebalance maybe once a quarter across like all asset classes, and then you're using like kind of like maybe 10 years of data to kind of determine the trends or something like that. But you can also imagine a much shorter term version of the strategy, where you're using, let's say, kind of like what John's saying, like just use very short-term data over the last few days and then rebalance maybe every hour or even more frequent than that. But I think but you could probably use actually very similar, same actually code, just change the parameters to execute both of these types of strategies.
Yeah. Awesome. Yeah, I'm just trying to make it click in my head, but it totally makes sense. Totally makes sense. Thanks.
Cool. Right. So those are two incredible strategies to start off also. Let's see if we can keep the momentum going. So the next one, let me move on to the presentation. I think I'm still sharing my screen, right? Yeah. So sorry, the next one. So then the next one is Patrick's Liquidity Sniper strategy. So this is also based on a new component that Patrick submitted. I think it's now actually available on the developer branch, which allows you to kind of track the data feeds, basically track the liquidations as a data feed on an exchange. So let's watch Patrick's video.
Hello guys, so this is Patrick. I'd like to show you my strategy that I coded for the strategy V2 certification here in the cohort 7. So I decided to go with a thing called Liquidation Sniper. The basic idea behind that is rather simple. So in crypto markets, you regularly have positions that are over leveraged and the margin is not enough to cover the position anymore. So that's normally in TradFi, you would have like a margin call, but that's not happening in crypto. Here you get just liquidated. Those liquidation events have like data feeds, so they're propagated by the exchanges, so you could listen to those liquidation events. And if they happen, you could like do some action. And I've noticed that several times when you have liquidations or bigger liquidations happening, so big in terms of dollar volume that's liquidated in a certain amount of time, then there's very, very often a rebound. That's just the order book gets flushed and it gets rebounded quickly. So that's the thing I'd like to catch here with that kind of strategy. So you can define like a time window that you measure for liquidations, and you can specify the trigger amount, so how much liquidations need to happen in US dollar value in that time window to trigger the strategy. And then if that happens, I place like DCA orders down the way that get filled and get into profit, hopefully. If not, then the time exit order stop loss will be hit. So that's kind of the strategy. So I've written down everything here. The main two components are I have a Liquidation Sniper controller that can be just run with the V2 generic with controller script. And the strategy design itself is also rather simple. And one of the key ingredients here is the liquidations feed that I created from fresh with the help of FIDE and contributed already to the Hummingbot Foundation. So it's already merged into the regular Hummingbot code base, so you all should have access to it. Here are all the parameters, like I told, trading connector, which pair, which side. So if you want to trade long or short liquidations, then the liquidations pair that you want to monitor on Binance, how long to watch, what's the trigger amount in USD volume, and the thing here, of course, for the DCA levels, like the levels, amounts, and all that kind of stuff. Logic rather simple, like I told, get the liquidations that happen in a specific time frame. If the amount exceeds the trigger amount and no active order, then start a DCA executor. So that's it in short. You can also do that like monitor for a specific pair and trade on another. That's what I'm doing here, just for, I have $20, $30 here. So I decided to monitor BTC USDT and trade ADA USDT on KuCoin. So let's just spin up the strategy. Here's the config. You can go over it, but for the time limit, I'll keep it brief. And let's just here like the trigger amount -1. That means like immediately hit an order so you can see it trades, but I've tested it. It really waits for the right liquidations. And I'm using the quick start here, which just uses what I've told here with the generic controllers and the configuration I created. So let's wait for that to start up. Make that one big here. Initialized, KuCoin already. And here you can say create limit buy order and stuff. And if we look over here to KuCoin, then we should see all the orders. But you can see they lay here. So they also have like increasing amounts. The further the price goes down, the amount increases. So that's it basically for now. And you can see the strategy is running like over here and executing the trades and doing all the stuff. So it's just waiting basically to be executed. And if you add like status live here, you can see that, let's make that bigger. that the DCA executor is running. And I'm also logging here, like currently liquidated long pair in the last 30 seconds is $0 US. So there were no liquidations. But since I had the -1, it will execute no matter how often. And you can see I tested here a bit with time limit and early stop, which has stopped. So yeah, basically that's it for the strategy. I hope everything is good here and understandable. And of course, there is a lot of improvement possible with high block and whatever, so that there's a lot of things. I wrote them all down here that can be used for further improvement of that kind of strategy.
Oh, thanks, Patrick. That was great. I think liquidations is a really this is an underexplored aspect of crypto, because I think in some ways, like, it's like when you're doing quant trading, you're always looking for like the drivers of some action. It's like, where is the actual, like, starting point for this price action we're seeing in the market? And I do think liquidations is one area where it's like, it's like, I have to sell because I just lost all this money in some liquidation. So I think tracking this data and using it across other strategies, things like cross-exchange market making, could actually be a really interesting area to explore. So yeah, thanks, Patrick. Okay, does anyone have any more questions for Patrick? If not, we'll move on to the next strategy. Okay, so the next one is a multi-indicator directional strategy that Vlad put together. So let's watch the video.
Hi, Vlad. Today I'm going to speak about a directional trading model based on a time series trend strategy implemented with the Hummingbot V2 controller framework. So the model is based on an academic paper written by former Hummingbot alumni. They looked at historical autocorrelations of cryptocurrency returns and found some interesting patterns. So in the short term, you tend to get mean reversions, and in the medium term, you tend to get trends. So here, negative autocorrelations in the short term and positive autocorrelations in longer term. And they found that these patterns have been pretty persistent between 2014 and 2019. I replicated their results and found that these patterns still continue in the last couple of years, from 2022 to 2024. And based on that, I built my time series model. So it has two groups of lagged returns, moving averages. So one is based on the returns lag from 2 to 5 hours, short-term moving average, and a longer-term moving average based on lagged returns between 2 and 7 days, which is 48 to about 170 hours. Then I estimated time series model coefficients using linear regression. So you can see orange ones are coefficients based on the long-term moving average. I look separately at small, medium, and big returns to get extra differentiation. For long-term moving average, you tend to get all positive, so these are trends. For short-term, you tend to get reversion of big moves, and trending, a little bit of trending for small moves. One more thing that's needed for the trading strategy is to figure out how I'm going to adjust my position dynamically as a function of the strength of the signal. And one feature I've used is to use different functions for putting trades on and taking trades off to account for transaction costs. So effectively, I'm a little bit more cautious putting on new trades because I know I'll have to pay two-way transaction fees. Here's the back test. The results are okay for a single time series model, but Sharpe ratio is about 1. It makes a little bit of money, but really to make this into a sustainable business, I don't have to scale it over many bots, many currency pairs. Here's the implementation. So I implement this as a standard Hummingbot V2 controller. So there's a config file, which is read into a config class. And this is the controller, which is a subclass of the directional trading controller base. The business logic is contained in a couple of methods: forecast, which is the time series model, and pos_func, which is the position function, as of how much of a position you want to have as a function of your previous position and the signal strength. And then this business logic, trading logic, is plugged into the Hummingbot V2 framework by re-implementing two callback methods: create action proposals, which is here it reads the signal and calculates the position and then sends trades to the smart components to be executed. And the second callback is update process data, which reads the data, recent bars, and calls the forecasts. So the entire program is less than 250 lines of code, which is great for a relatively sophisticated strategy. So here's the bot. It's been running for the last several hours. The market hasn't been moving too much, so Market's been pretty quiet, so it hasn't really done too many trades, but you can see the values of the moving averages. You can see the expected Sharpe ratios, annualized Sharpe ratios before and after transaction costs. It hasn't done trades, but typically it trades 1 to 2 times per day. So I expect that before the end of the day, we'll get some good trading opportunities. So that's it. Really pleased with the Hummingbot V2 framework. It's very flexible, quick, and a good way to build and roll out trading bots. Thank you very much.
Great. Thank you, Brad. That was incredible. I think your presentation really illustrated kind of like, it's almost like this is actually how I would recommend someone start with strategy, which is like start with some type of like academic basis, so start with some type of research that someone's done that's provides a theoretical foundation for something, implement that in a simple way, just validate if it works, and then start to, and really build off of the framework that they already have. So you can see here that, the code that Vlad added, may not be like that many lines of code, but it took him a lot of kind of research, a lot of experimentation to get to an implementation that actually worked. And so even here, it probably has maybe another many weeks of experimentation left to do until it's at a point where it's like a 2+ Sharpe ratio or something like that across the board.
Absolutely. Thanks.
But I think hopefully, I think one, because I think I'm pointing more like, I think people tend to focus on the code aspect, but I think there is that kind of like research and testing that really goes into it. So I would actually kind of just assume that you're going to be doing that a lot more than writing code if you want to build a social strategy. Okay, but Vlad, do you want to say anything? Is there anything else you want to say about your strategy, or I guess anything else? Okay. All right. Okay, so let's move on to, I think 4 down, 4 to go, and let's move on to the next one, which is team strategy. And I think we always encourage team ups because I think people with various backgrounds and various skill sets can help each other. So this one is a dynamic liquidity management strategy for Uniswap V3 by Nubix and Melted Blocks.
Hello, I am David. I'd like to present to you our strategy that I've built with Nicolas for the 7th cohort of the Hummingbot Bootcamp. So the goal is to manage the liquidity provision in Uniswap pools. Let me show you an example. So let's say that you have USDC and ETH pool, and you can see that you can choose the price ranges that you like to invest or liquidity, like to put your liquidity basically. The higher the range is, the more fees you are gathering. But you don't like to make the price ranges too tight, because then if the price will go outside of this range, then you are not earning any fees. So you have to balance between how tight are the price ranges and how often you need to rebalance. So our logic is to, first of all, add the liquidity position initially, and then fetch current prices. Like this is on-tick method. So on-tick, we're gonna fetch current prices and verify if the price is outside or inside the range. If the price is inside the range, do nothing. If the price goes outside of the range, then we are withdrawing position and rebalancing the portfolio. So we are swapping one asset for another, and then we are adding new position with updated range. So our position is always in the range, and our portfolio is balanced, so we are not suffering the impairment loss. So let me show you how it works in terms of the code. So here's the code for our script. It is coded in a strategy version 2. So the user have to provide a feature. This is how much gas the user gonna pay. The expected total position value. The price spread, it means like how tight should be these price ranges, the expected ratio between the two assets, and also the status report interval. The status report interval is that how often should the on-tick function run and verify if the price is outside of the range. We don't like to do it too often, not every 1 second, because like it's too much. Like this is on-chain actions, so yeah, it's not like transaction processing is like for 1-2 seconds. So we don't like to do it too often, but user can define it. So the main logic is here with create actions proposal. So we are verifying if script should be running, and then we are handling this time, how often it should run. And we are doing init task, which is just adding the initial liquidity position. And then we are running the main task, which is gathering the pool price, process the data, and then also verify if there is any active position. And then this is to handle asynchronous task, so the main function is not overrun the initial function. And then we are verifying these ranges. For now, we are just closing positions and finish to true, but we are working on an improvement. So it's also gonna rebalance and add liquidity with new ranges. So the data that we are displaying and gathering is the pool price, the timestamp, trading pair, quote value, base value, or the fees, and the price ranges. So for this demo, I'm running this over Ethereum and USDC pair on Arbitrum and choosing very tight price ranges. So let me run the script. So we are waiting for the Arbitrum connector to be ready. And you can see that we are creating new position over these price ranges. If I run status command, I'm going to see that we are trading this pair, the current ranges. You see it's very tight. And yeah, the value of the position, each quote and base and total value. So yeah, that's our strategy. Thank you for watching this.
Oh, thank you for thanks Mitchell. Thanks to Nubix and David for doing that. I think that I know that using Gateway and creating kind of like DEX strategies is always a little harder. So I really appreciate you guys, doing that. And it seems like you guys something that actually is automatically in position now.
I'm not sure if David's in here, but yeah, we definitely got kneecapped with Python and Gateway. It's the asynchronous nature of stuff. But there's definitely a lot to be discovered with liquidity pools and Gateway. So, I mean, I know we're going to continue working on this kind of approach.
Cool. Yeah. I think Paul and I have plans to kind of like try to create an LP executor and try to, hopefully in the next few months, there'll be more like support for folks trying to build DEX strategies.
Yeah, a lot of it is managing the status of the liquidity pool and how you want to keep track of it. If we were to do multiple liquidity pools, would we get like rate limited? So there's all kinds of like things that we definitely have to build in.
Yeah. I agree.
That's very impressive because the first time that someone creates a smart strategy with a liquidity pool, so it's very good. The idea of the main problem that you are facing, that you are saying that how to make a synchronous, like the strategy on that stuff, that is basically what an executor is solving, because the executor by default is async. So it's like keeping track of the status on that stuff should be like inside of the executor. And for the limits, all that stuff probably will be good to make like an integration. Maybe if you want to like continue with this and make it serious to manage like a lot of pools at the same time in the same script, right? I will look for something like to create like a data feed that instead of using the gateway to get the data of your position, uses like another type of data feed that you can get the information via WebSocket, for example, to update your local executor or something like that, and use the gateway to place the orders, to place the LP position. Maybe right. that would be something that you can use like the gateway to trust in building the position, the LP position, and put in that position, the data feed to avoid like being rate limits and all that stuff.
Yeah, great. That's probably super smart. Get another data provider and then just use the gateway as like the execution and like pretty much just that. Yeah, that would make sense.
Yeah, but what great work.
Okay, so let's move on to the next one. So the next one is from ThinkSense. Right, there's a garbage truck outside my window. It might be a bit loud, but basically the next one. So ThinkSense, he's actually a electrical engineer. He's kind of learning finance, and so he used Botcamp to try to really learn how trading works. And so that's why he decided to basically create a V2 version of the Avellaneda and Stoikov strategy, so they could better understand the fundamentals of market engagement. So let's watch this video.
Okay, so I'm going to start to introduce my strategy, which is the basic Avellaneda Stoikov strategy. First of all, let's talk about how does it work. So like in the simple PMM script, like this is a simple pure market making script. We just have two variables, which is the like market price and the spread set by us. And then we just buy low and sell high based on these two variables. So in this AS strategy, we just have two fancy words, which is the reserved price and the optimal spread. And these two are just different versions of this market price and spread set by us. So basically it just means price and spread, to adjust it to deal with the inventory risk. Yeah. So let's talk about a little bit about inventory risk. Like, so as a market maker, we don't like trend, right? Because if there is a trend, like especially if it's downwards, like it really sucks. Like this is an example. Like there is a bad coin, which is made up by me and the USDT market. Like if this price keep going down, and this means like our USDT is going to be lost because we're going to buy a lot of bad coins, like without selling any of them, right? Because this is a downward trend, and our buy orders tend to always be filled, and the sell orders will not be filled. Yeah, and we'll end up with a lot of bad coins here, like over here, like without any USDT left in the most extreme case. So like how to deal with this? Like it's pretty simple actually. Like we just need some mechanism so that, you know, when downwards trend happens, we just don't buy that much like bad coins. Like this is bad coins, like or BTC, and they're the same. I just used like cryptocurrency. We just don't buy a lot of them when their price is going downwards, especially when there is a trend over there. So we just like in this AS model paper, there are two variables, which is the reserve price and the optimal spread, like which is shown here. So I will not read out these formulas, but I will definitely like to make it more clearer, make it clearer to about the variables. So like the S is current market mid price, and basically it's just the price in the PMM grid, and Q is the inventory position deviation. I will explain all of them later, and I'll just say like this guy will be calculated based on like current and target inventories, and the gamma was set by users, and sigma is fetched from source, and T minus T, which is time to the end of market, like this is set to be a constant, because like I'll also bring up about the reasons later. And the optimal spread, there is only one new variable, which is the kappa, which is denoted by K here. Like this is the order book liquidity, and this is also set to be a constant. Okay, the conclusion is just that Q, which is the inventory position deviation, will be negative if you want to buy more, and positive when you want to sell more, higher when you are farther away from target inventory, lower when you are near to the target inventory. And gamma is set by yourself, like sigma is decided by market, so we can't do much about it. T minus T is a constant, K is also a constant. So yeah, let's run it.
Let's go ahead in the video a bit.
1 minute, and so you can see here, like if you pay attention to the price changes, it seems that the reference price is not changed, like it's always the same as the original price. But I think that's because the adjusted parameters are too small, so that they are not able to like adjust the reserved price properly in like to make it significant. Like that's also my next step. So for the future, like I will have a better understanding of the paper, so you know, maybe solve some PDEs, and it seems quite interesting. And I'll find better ways to represent the parameters, like which also relate to the questions, like the problems I'm faced now. So I also make this classic model more complex based on other papers or methods, just as Hummingbot did in its previous version of this model. Yeah, so I think that'll be all. Thank you very much. Okay, so I'm...
Cool. Well, yeah, thanks, Ting-Sen. I'm not sure if you're on the call, but yeah, I think that was a really good explanation of the Avellaneda strategy model, the core tenets. And in terms of your questions about recommendations, so I think this model is one of the classic papers. But if you look at practitioners, they usually use more complex, more later models and later papers. So there's one guy named Oliver Gwent. He's kind of like, I think his models are actually, I've heard, are actually being used today by trading firms as a basis for their models, because Gwent, I think, focuses a lot on market making like across like in a portfolio approach. So if you have lots of different strategies, how do you assess kind of like your inventory, aversion across the entire portfolio, and how do you kind of create a model that will essentially kind of like tell you how to rebalance, given your different aspects. So I think actually I'll try to find a link. I think he has a list of like papers on his website. So I think now let's see. Yeah, so I would actually probably just look at his papers as a kind of like a starting point. I'll put it here as a to look further, and then I think another area is I think Stoikov is now a professor at Cornell. He still kind of does research on various aspects of finance. So for example, he did an area of research on something called a micro price, which is another way to express a price, like as a function of like how the order book, what was happening in the order book and what's happening with recent prices. So there's actually a Botcamp participant that took that micro price model and created like an estimator using Hummingbot as well. So I think there's basically I think the area of academic finance, unfortunately, still lags behind general practitioners. But I do think if you look at the Stoikov's research and Gwent's research, I think a lot of them are still like experimenting with various models that you might already use. Okay, so let's move on to, we have three more to go. So let's see. Actually, I think two more. This is from Linus. This is Scalper. And I think Linus is here as well. So I think we'll see if you guys want to talk about the strategy afterwards.
Hi, everyone. My name is Linus, and this is my short demo for the VWAP scalping strategy that I built with Hummingbot V2 strategy framework as part of this Botcamp. It's still very much a rough draft, but this strategy utilizes the candles to fetch market data, and with that then adds pandas TAs indicators, in this case the VWAP with standard deviation bands, to basically generate signals for when to go long or short. In this iteration, this first iteration, this strategy is primarily a mean reversion strategy. So I'm looking at a few things such as the deviation between my two upper bands and my two lower bands of the VWAP. So once they have deviated a substantial amount, then that's one part of the criteria to when I would try to go against the trend, if that happens quickly enough. And so with that, I also look at a few other things such as the candle positions within the cloud or within the bands, so to speak, but also its relation to VWAP and a few other criteria as well. If all the criteria tell me that I should be making a trade, I'm utilizing the DCA executor. Since this is a mean reversion strategy, it can be very helpful to split up your entries a little bit, because you'll almost never end up getting the best available price. With that as well, I'm utilizing the triple barrier config to both test and see my take profit and stop loss in time series in that as well. And then that's basically the very short overview of the strategy. I've had a few tests that we can look at a little bit, see what they do. So I'm just plotting when it's buying and selling, but also plotting the stop losses and the take profits, so we can sort of get an idea of how it's achieved. This is not a full back test, by the way, but it still helps a little bit. And then the code as it is, I'm definitely not technical, so I'm sure don't look at that too closely. And here's the bot running. It's been quiet over the weekend, so I've not gotten much joy out of this strategy for now. But as I continue building, working on this, I hope that it both will prove to be a very useful learning experience, but also hopefully a slightly profitable trading experience down the line. All right. Thank you very much.
Well, thank you very much, Linus. That was great. I think that hopefully you learn a lot by doing this, and you'll have a chance to keep on improving.
Another great thing is, sorry, Linus, I interrupt you. Another great thing is that I saw that you were able to use the research notebooks to see the VWAP bands and the signals and stuff. I think that is important to understand like how your strategy is going to behave and all that stuff. So great work with that too.
Yeah, thanks. Very useful. All right, well, I think that this is our last one. So this is a CEX DEX Spot Cross-Exchange Market Making from Dimitri. So let's watch a video.
Such as Uniswap or PancakeSwap. Hey, I'm going to share with you the design of CEX DEX Spot Cross-Exchange Market Making strategy. The idea is that we can provide liquidity from centralized exchanges to automated market making DEXs, such as Uniswap or PancakeSwap and others, using concentrated liquidity positions and out-of-range positions to be specific in place of limit orders on the maker side. So general idea is that at least on some of the decentralized exchanges, there should be less liquidity than on CEXs, with enough volatility to provide opportunities for cross-exchange market making. So a little bit of background on how this works. The idea is that concentrated liquidity, which was introduced in Uniswap v3, allows you to specify a range of prices for which you will provide liquidity. And when the price goes out of those ranges, you end up with the position being just one of the tokens in the pool. So for example, here, the price goes from right to left, increasing, and token 1 is base token, let's say Ethereum, token 0 is a quote token, which is USDC, for example. When we start, our liquidity is just sitting in Ethereum, but as the price increases and pass through our position, we end up with just USDC in our position. And these basically allow us to treat this as a limit order, because we specify the price, and when the actual price of the market pass through that, we sell our token. The mechanics of it is pretty much involved. So my idea is that for starters, you can just place your liquidity in the next price range to the current one, or like to be exact, to the minimum price that would be profitable for you, and calculate the profitability of the whole thing from empirical results. Here are lots of documents on how to calculate the price movements in straight liquidity pools. And we will look on the logic of the strategy. It is pretty much follows the simple cross-exchange market making strategy. It's basically the same thing with substitution of limit orders on cross exchanges with out-of-range or out-of-range positions in straight liquidity, which are also sometimes called range orders.
So, thank you. So yeah, so actually, this is so Dimitri sent me the code for the strategy afterwards, I think. But yes, Dimitri, if you're on the line, have you been able to run the strategy?
Yes, sure. I got strategy running. It shows some results randomly when making profit on some trades, but like mostly going around zero so far. But got me really reassured about possibilities there.
Okay, cool. Yeah, and also I think Dimitri also probably had to struggle a lot with a way to get it up and running. So thank you for putting up with that.
Very good work. What I recommend you is, are you doing on Ethereum, Dimitri?
On Arbitrum.
Yeah, but which tokens are you trying to do the cross exchange?
Ethereum. So far, Ethereum, and I think one of the learnings from my experience so far is that it would be nice to do like a proper backtest or research, like those that Vlad did with the strategy to better pick the assets.
Yeah. Probably that's like, if you are doing it on Ethereum, it's like you are competing with the big guys, because it's like probably it's like the top assets are going to be like more dominated by the top guys. So it's like probably the analysis that you can do is like pick like a pool with find a pool with low liquidity on Arbitrum that you want, that has good liquidity in another CEX that you're hedging. You're doing a cross exchange actually. That can be like, if you are getting profits in Ethereum, imagine if you are finding a pool that is like random pool. And I think that the thing that you are doing is not so. It's like I hear a lot of people like doing the opposite, like providing liquid, like having like a big pool on an LP that has a lot of liquidity, and providing liquidity on a low level and a CEX that with low liquidity, that the fees lets you do that. But I think that what you are doing is really good. Great work.
Mm-hmm.
Thank you.
Also, so apologies. There's actually one more mission. I forgot to add it to the initial list, so I'm really pretty sorry for that, Alex. But so basically, this is Alex's strategy called Chalk Catcher, which is a mean reversion strategy using perpetuals. I'm added to the presentation the voting thing. So don't vote until I've added it, and give me like a minute or so. So let's watch Alex's video right now.
Hello. My name is Alec Otto, and this is my submission for Demo Day Cohort 7. This is called the Chalk Catcher, and it is effectively a perpetual mean reversion with Bollinger Bands. To start off, this script is a basic Bollinger Bands mean reversion strategy that places leveraged limit orders on the lower buy and upper sell bands for every new candle that is created. This controller is designed to capture small percentage chop when there is low volatility in the markets, and to stop trading altogether when repricing events or market moves the price of an asset to avoid heavy losses. So let's get into it. I decided to build this using the controller base to gain a better understanding of how Hummingbot works and really kind of get my hands dirty with just all of the intricate fun stuff there. I focused on two main methods that I used to build my entire controller. So the first, of course, is the update process data. This is very similar to how most strategies kind of handle this, except for instead of sending signal, we're just kind of appending the Bollinger Bands to the candle's data frame. But we also do a check where we store the timestamp of the most recent candle on startup, and then we check every tick to see if the stored candle matches the most recent candle's timestamp in the candle's data frame. So if there is a mismatch, then we get a request to refresh the orders over here. Then in the determine executor actions, this is kind of where the meat and potatoes are here, because on every single tick in the control loop, this is checking to see if this is true. If it is true, then it has the opportunity to refresh the orders and place new limit orders. In that, we have a few different checks. The first is to check if the current asset's price is not exceeding the upper or lower Bollinger Bands, because we don't want to place a limit order that would fire off immediately. And the second is to check if the current executors are not trading, because if there's an active trading for an executor going on, we want to leave that. We don't want to replace another position. And then third, there we do a check to see if the Bollinger Band's width is not exceeding our set width limit, and that's to keep us from trading during repricing events. All of this utilizes flags, which is kind of my preferred way to handle this, and each of these are then checked finally at the very end of the determine executor actions method to see if the tolerance approval and refresh approval are true. And if that is the case, then we are good to refresh the orders. If any of that fails or is not true, then we will simply not refresh the order for one or both of those. So looking at the actual code itself, or well, Hummingbot, you can see it running here. It's been running for about 10 minutes now. And moving over into the code, the top is all pretty much normal imports. You have your normal configuration. But then if you move down to the class, you'll see here, I have all of my flags initialized here, as well as all of my data points and variables initialized. In the update process data method, we have everything looks pretty similar to what you would see right up to about here, where we append the Bollinger Bands, except instead of sending signal then, we just provide this information as flags, and we do our check here to see if the candle timestamp is a mismatch, giving us the green light to replace orders. Then we can move down into the determine executor actions. Here we do a few different things. At first we just check to see if the order refresh request is true. If not, we don't send anything in the queue. If it is, then we continue on. We grab the mid price. We check to see the Bollinger Bands limit and just print out a bunch of information. Further moving down, we check to see if we have exceeded the upper or lower bands. And then moving further down, we gather our executors and check to see if any of those are trading right now or not. And then finally, we have our width check right here. And if all of that is good, then we check to see if our tolerance approval and refresh approval is true. If so, then we're green light to replace those orders. And finally down here, we reset all of our flags back to false and the cycle begins anew. Here you can see we've been trading a little bit. So far, it's been pretty good. We're winning a little bit more than we're losing here, and I have this just set to 1 minute candles right now with a 20 length on the Bollinger Bands just to get a lot of action so we can kind of make sure this works and I can showcase a little bit about how it all works. We're also pulling price data from Binance, so there is a little bit of a discrepancy between Femex and Binance, but as you can see, it's every time there's a new candle, it will replace this limit order just like it did right there, where it determines the Bollinger Bands are. And that is pretty much how it works. Thank you for your time. And yeah, it's been a great course. Take care.
Thanks, Alex. That was great. That was a really clear presentation. And I think you're clearly an engineer, because I think it shows that you structured the strategy.
And the massive wall of flags. Yeah.
But overall, I think I like your approach here, because I think it's like, now you have a foundation, you can do lots of things going forward with it, experiment with the different indicators, try different ways to configure the position executors, look at the charts. And this is basically what Fede's kind of been doing but when he's not building the framework, he's also been doing it himself, like running bots. So I think this is like I think there's a lot of potential for experimentation.
Thanks a bunch.
Always happy to have another coder. Good job, man.
Yeah.
Thanks.
Right. So I think that was the main part of the presentation itself. So let me go back and just show you the I guess the video, the code here. Actually, I'll just show my screen with the Mentimeter thing. So I think this is basically the code. So let me just copy the voting link again and put it in the chat. So basically what we're going to do is we're just rank all the strategies we just saw in this Mentimeter chat here. And so the way I think it should work is basically if you go to it, you can kind of like drag your strategies, into and basically stack rank them. And then after you're done, you can just hit the submit button on your computer. So and we should be able to see it in real time here, because I think this is anytime someone submits, it'll update this view. So I'll give everyone just another maybe 5 minutes just to complete this thing. And maybe like just 2 minutes. So basically, if anyone needs more time, let me know. But let's go ahead and do the voting now. I'll do it on my phone. And I think all of us should vote. Yeah, anyone, including the Hummingbot Foundation staff, basically anyone on the call. And if you go to you can also use the access code as well if you guys can't find it. So does anyone not have problems, any issues finding the site? We should play the Jeopardy music. Okay. Does anyone still need more time or to vote? Okay. Last call. Going once. Going twice. All right. We're done. So it seems like the winner is John with the cross-sectional momentum strategy. So congratulations, John. I think it's very much well deserved. I think you're the official winner of the Cohort 7 most valuable strategy NFT. But everyone, I want to congratulate all 10 of you who have submitted a strategy for demo day, because I think building your custom strategy in less than 5 weeks with a new framework that's already being built halfway is an incredible accomplishment. So I think all 10 of the Cohort 7 students who submitted a strategy for demo day are going to receive the Cohort 7 NFT, which we're going to put some effort into designing with generative AI in the next few days, and hopefully you'll have a nice looking NFT that you can do whatever you want with it in the next few months. So I'll try to get both the certification as well as the NFT lined up in the next week. My goal is to get it all done before Fede and I are in Austin next Monday. So I'll make sure to get it done this week. And you'll get an email basically with the instructions on the certification, as well as the link to the NFT and all that kind of stuff in the next 1 week. So and I think you guys will be in Austin. To let us know on Discord. We're going to have this like demo event, and we're going to launch. We'll probably just find a bar somewhere and a happy hour and try to present the V2 framework to the world, which you've already seen. But I think that hopefully we'll keep on building on top of it in the cohorts come. Also, I do want to make sure that I think this cohort actually, in my opinion, has been the best one so far, because and it's really a testament to the energy and the camaraderie of the folks in the cohort. So that's why I think you guys have we've created the Botcamp alumni channel, and one reason we want to keep on doing like kind of info sessions that are public, and they're almost basically meetups for the overall community. So try to attend the next info session if you're around, and I think we'll also maybe try to set up some other dedicated kind of Botcamp only events maybe sometime later on this year. But overall, I think our goal is really to try to create a community with Botcamp. So hopefully, it's just asking questions and channel, answering questions, just saying hi. Feel free to just engage with us after this cohort's over. Also, I want to give a special shout out to Patrick, because Patrick also, because he's done some documentation on to help himself use the V2 framework. So show some of his documentation to me, and I think this will actually help all of us kind of understand how the V2 framework works at a more technical architectural level. So there's currently a governance proposal, I think, to provide a bounty, which hopefully will get passed in the next couple of days. And once it's passed, the foundation will create a bounty and assign it to Patrick to have him work on the V2 docs.
Yeah, thanks. Happy for it.
So this branch wraps up the cohort 7. I mean, and as mentioned, I think this has been the best one so far. We want to keep it going. I think we're going to give a pretty substantial discount if you want to attend the next cohort as an alumni for cohort 7. So I think I'll try to include that in my email at the end of the week, along with the discount code, along with the certification and the NFT info. Because we want to encourage you to take another cohort, because we are going to mix it up in the next one and try to add more theory and marketing content. So and then I think the developer one, I think we'll try to maybe do another developer cohort sometime on the fall. So just finally, just thank you very much. I think that we recognize that Hummingbot is still an evolving framework. So the fact that you guys took a chance, paid, spent your hard-earned money to have us teach this half-built framework to you and have you build strategies, I just really appreciate that. And so hopefully it was worth it. And whatever we can do to try to continue to add value to you guys and make sure that the certification actually does provide some value career-wise or whatever, just let us know. And, we'll try to hopefully make this something that you can we'll recommend to your friends. Okay, well, I think that pretty much wraps it up for this demo day. So thanks very much, and we'll get the recording posted later on today. Bye, everyone.
Later.
Bye.